Welcome to the first of a series of presentations explaining the Australian R&D Tax Incentive. Hi, I'm Stuart Hazel, and in the next series of presentations I hope to go through different aspects of the R&D Tax Incentive as applies in Australia. In this first presentation we will be going through the fundamentals of the Australian R&D Tax Incentive. One important element to always understand when looking at tax incentives is that it does relate to the Australian taxation legislation. And thus there are a number of elements that are important in terms of compliance under the Australian Tax Act. In putting this series of presentations together, I have used my best endeavours to ensure that the information is correct at the time of making these presentations. However, please understand that over time, rules and regulations do change, and so I'd encourage you always to consult with business.gov.au to be aware of the current status of the R&D tax incentive. One of the fundamentals of R&D is to understand why a business would invest their capital in R&D. There are a number of reasons: keeping ahead of the competition, entering new markets, expanding the business, indeed staying in business when you're confronted with competition, enhancing the value of the business. There are multiple reasons why it is sensible for businesses to invest in research and development. To this end, the Australian government has created a tax incentive to encourage investment in commercial R&D. This tax incentive is created because the government recognised the intrinsic risk associated with certain elements of R&D, and thus there is a higher deductible allowance for those activities deemed to be eligible. Thus, there is a higher level of deductibility allowed for activities that are considered to be eligible R&D. And indeed, in this series of presentations, I'll spend some time explaining what the term eligible R&D encompasses. It is important also to understand that it is an entitlement to claim the R&D tax incentive for eligible R&D activities. That is, it is not a competitive grant scheme, it is an entitlement. However, that entitlement is dependent upon you conforming with the rules and regulations as set out in the Tax Act. One of the major advantages of the R&D tax incentive is the enhanced cash flow it can deliver to a business, and I'll discuss this a little more in the coming presentation. As an entitlement, there are a number of requirements that you need to meet to be eligible to claim the R&D tax incentive. These are to be an eligible entity. For simplicity in this presentation, generally that means that you are a proprietary limited company or a limited company registered within Australia. You have to undertake eligible project activities and have eligible expenditure, and these two elements are interlinked. And finally, you need to maintain appropriate records to justify both the project activities and the expenditure. Failure to comply with any of these requirements disqualifies you from claiming the R&D tax incentive, and if you do claim the incentive and an audit occurs, this can trigger penalties for invalid claims that may have been made. Now, during this series of presentations, I'll be talking a lot about rules and regulations and maintaining of records. It's important to understand that this is not designed to be onerous upon the business, and many of the records should be kept as a normal part of the day-to-day operations of any corporation. So basically, don't be scared, but be aware. So what are the benefits that can flow to a corporation from the R&D tax incentive? If you are a larger entity with a turnover of more than 20 million, the R&D tax incentive is a non-refundable tax offset that is set at a premium that is linked to the intensity of the R&D activities within the organisation. The government aims to encourage larger and medium-sized companies to invest in R&D and provide a higher incentive where there is a higher level of R&D intensity. This tax incentive applies for expenditure up to 150 million. These tax offsets apply to expenditure up to $150 million in an income year, after which the incentive is reduced to the company tax rate. For most people and companies listening to this presentation, your turnover will probably be below $20 million. And for those companies, there is a different set of rules with respect to the R&D tax incentive. For these smaller companies, the R&D tax offset is a refundable payment. That is, the company can be in tax loss and still receive a cash payment from the ATO for eligible R&D activities claimed. The level of the R&D tax incentive is set at 18.5% above the claimant's company's tax rate. Thus, if your company tax rate is 26%, the value of the tax offset is 44.5%. That is, for every $100 you spend on eligible R&D, you will be refunded $44.50. So for companies in the early stage of development investing in R&D, this has a positive impact on the cash flow. This has a positive impact on the cash flow of the business. It needs to be understood that in the longer term, that the refundable R&D tax offset does have an impact on the company's franking credits. And you should discuss with your tax accountant the implications of franking, the implication on franking credits for your business to understand your obligations. So let's turn now to some of the administrative side. So let's turn now to the administrative side of the R&D tax incentive. Two government departments are involved in the administration of the R&D tax incentive. Industry is responsible for the registration of R&D activities, as well as the assessment of advanced findings and audit and review of research records. Industry emphasises that this is a self-assessment process. What this means is that you submit a registration form and this is assessed by the department. However, they do not do a detailed audit, and you assert by signing the registration document, and you declare by signing the registration document that you have the necessary records to validate your claimed R&D activities. And we will discuss many of these in this presentation and future presentations. The Australian Tax Office is responsible for processing tax returns. They will assess the tax incentive schedule, which is a record of the expenditure that you have claimed with respect to the R&D tax incentive. The ATO expects that you will be able to validate your expenditure through records such as timesheets, expenditure records within your chart of accounts. They also administer two adjustments to the R&D tax incentive called the clawback adjustment and the feedstock adjustment. And again, I will discuss these further into this presentation and in other presentations in this series. Just a notation, if your expenditure is less than $20,000 in a single income year, then you are not eligible to claim the R&D. You are not eligible to claim that R&D expenditure, except if those funds were expensed with a research service provider registered with the department. In that situation, you can claim smaller amounts of the R&D tax incentive. Industry maintains a list of registered research service providers that you can consult. With respect to timing, when you register your eligible R&D activities, you have 10 months from the end of your financial year to complete that registration. Thus, for a financial year that ends in June, you have until the following April to complete your R&D tax incentive registration and submit to Industry. That registration needs to be submitted prior to completing your tax return, as the registration number provided by Industry will need to be quoted in that tax return. I would now like to mention advanced and overseas findings. Industry allows companies to submit an application for an advance finding. An advance finding provides a level of comfort to companies that their R&D activities will be registered, as the advance finding, as the name implies, is submitted in the financial year of the first registration in which the activities listed in the advance finding will apply, and goes out for a period of 3 years, and goes out for a period of up to 3 years. This can be very useful if you have some level of concern about the eligibility of your activities and wish to gain a ruling that the project and activities are eligible, or you may be seeking investment and wish to assure your investors that the money that they put into your company will be enhanced to the value of the R&D tax incentive. An overseas finding is similar to an advance finding. Indeed, the same form is used for both advanced and overseas findings. The difference here is that if a company is wishing to claim expenditure for R&D activities conducted offshore, they are required to submit an overseas finding within the first financial year of such expenditure if they wish to make a claim. There are a number of rules regarding overseas expenditure. The overseas expenditure has to be related directly to Australian R&D activities, and the level of expenditure on overseas activities cannot exceed the level of expenditure committed within Australia. If you have any questions regarding overseas expenditure, it is strongly advised that you consult Industry or your registered tax agent to get more specific guidance that is relevant to your organisation. Thus, Returning to the registration process, it is a two-step process. First of all, registration with AusIndustry, and then submission of the company's annual tax return. An example of the R&D tax incentive schedule can be found at the URL listed below. To put that all together in a diagrammatic form, you can see at the top left, the company completes the R&D registration form and lodges that with AusIndustry. AusIndustry processes the application and, subject to any queries or audit, provide a letter with a registration number. That registration number is used by your tax accountant to complete the relevant schedule within the company tax return, which is submitted to the ATO for processing. There is some level of data validation between AusIndustry and the ATO to ensure that the information provided is consistent. All things being well, the ATO will then send to you your eligible tax incentive payment. This completes the presentation on the introduction to the Australian R&D Tax Incentive. In the next presentation, I'll be going through I will be discussing eligible R&D. If you have any questions or comments, please feel free to email at the address shown. And if you have found this presentation of use, please subscribe to this series of presentations on the Australian R&D Tax Incentive.